Hey guys, Christopher Mullen here. Just a quick afternoon update on what the overall markets are doing here. I just want to look at the SP 500 and gold more or less particular. If we zoom in on this recent chart, obviously we've seen the big sell-off in March, and we've got the first kind of cycle and bounce, and then we finally got into an upward momentum where we're starting to break out of a basing stage. Momentum shifted. All of our underlying indicators started to turn green and going from deep red, which is you do not want to be touching equities, to starting to show signs of strength. And we've really kind of kicked into a strong uptrend here for a move. And we have traded this to the upside, and we ended up getting out near the highs right over here for about a 5 and a little bit, 1/4% to the upside. Since then, it's pulled back, and now I'm concerned that our cycle analysis and intermarket analysis indicator down here is telling us, hey, we've gone from a red trend, a downtrend, to now an uptrend, and we could be starting. This is 3 days in here. This is a 30-minute chart, keep in mind, only regular trading hours. 3 days, we've been actually showing signs that big money has been flowing into the defensive, the risk-on assets, and that's not a good sign. Typically, when we see that, the stock market is when we zoom way back in time here, we got into a strong trend, a new trend to the upside. Everything was green, the internals, and then for a month and change, 2 months really, the market rallied with the internals actually getting worse, deeper, more red, even worse. And eventually when it rolled over, we saw this huge crash. And so on a smaller scale, that's where we are now. The market's rallying, yet big money, smart money is moving into different plays, not just equities. They're actually moving out of equities and into other places. So my concern here, and this is one of the reasons we got into it, we ended up getting out right over here, and now we're long gold, because I think what will happen is if this is a rounding formation, putting in a top, and it starts to head lower, we're going to see, I think, a lot of things, almost everything sell off again. I think gold can and bonds could be the kind of safe haven play. I think gold miners could actually get pulled down and hit pretty hard if we start to break, a significant pivot low here. And a couple things to really look back is we had a gap window here. We had a gap window here. And both of these gaps have an overlaying section that hasn't had anything traded through there yet. And gaps almost always get filled in the SP 500. Could be same day, could be 2-3 months, year later. You never know, but almost every gap eventually gets filled, which makes you wonder, well, what about this gap down here for that double dip recession? Well, I wouldn't say recession, just a double dip. And the question is, do we bounce off this level if we get down here, or do we break through it? Um, anyway, we'll see how that plays out. This could sell back down at the way the markets have been moving. We could be back down at these levels in a week or two, or the stock market could take months to continue to grind higher and slowly roll over and eventually come back down for another dip. We don't know. We're just following price, and we get in, we get out as the market sees fit. But again, let's take a look over at gold. Here is the gold chart. We've gone from a negative kind of market condition to a bullish market condition. We got an oversold level. It took off. This is back here when we had huge volatility in gold. Massive price swings. Didn't really want to get too involved in it because it was having these massive 5-8% swings. It's rallied up and it had another pullback, and volatility, everything has started to kind of become more stable with gold at this point. And so we got into this buy zone, and it's starting to move up really nicely. Hopefully we'll see it break this level and start to extend and go to the upside. Again, I think the gold's got that safety kind of net that if the stock market collapses as a big 5 or 10% down day eventually, the gold miners will get hit really hard. They could drop 5, 10, 20% in a day, where gold may only just pull back 2 or 3% and maybe eventually just bring it back down to where we're at. We could see gold continue to just kind of flounder around here in a range and hold its ground while the market consolidates. So maybe worst case scenario, gold just tests these lows again. So that's why we're in gold. It's the kind of the best asset now, and got the best risk potential in terms of the stock market starting to roll over potentially by the end of the day or the end of this week, and we see some blood in the streets again. Anyways, that's it for now. Take care. Bye-bye.